ladies and gentlemen, I take this opportunity and would like to welcome our chief guest for today, Mahesh Thakkar. He's the Director General, Finance Industry Development Council. Ladies and gentlemen, let's give him a huge round of applause. He's a special keynote addresser. Thank you very much.
Shri Mahesh Thakkar. I've been personally privileged to know him for many years, and he's been such a supporting person to us. I'm really thankful to him for inviting me into FIDC as editor of FIDC News, which is their quarterly newsletter. I think he saw something in Banking Frontiers and the work we do, and he wants to bring that into the newsletter. We hope to make that newsletter into a magazine down the road and to work with FIDC for events, conferences, seminars, etc. So Mahesh sir, I'm really thankful for you to join us in this privileged conference, and we look forward to your perspective for the sector as a whole.
Thanks a lot. It's lovely to see all of you because whole day you must be listening to various sessions, which I know were very technical and good sessions at the NBFC. At the outset, of course, I thank Manoj Agarwal and Banking Frontier team. You know, it's a part of us, and we have this newsletter for first 14 years. We had our newsletter editor from N.M. Mukhi from Ahmedabad. He retired due to old age and illness, and Manoj has taken over work. And we want quarterly newsletter to be bi-monthly from next year and monthly from the year thereafter. Manoj, I'm making this announcement on the mic. Okay. And we have a lot of other ambitious plans because it's a dissemination of information, and information these days become outdated if you receive 2 months or 3 months in arrears. You know, every day, of course, we see on the mobile what's happening, but it's analysis, its impact, and the summary of all the things what is happening. But still, if it's better if we try to, reduce the number of pages and increase the frequency. Let's aim at it and let's commit, within 1 year or so. We will do it and put a team. People will, of course, pay for the good content if it is there, and there's not a problem. FIDC in coming times, one of the main things which we are going to talk about is the dissemination of information among the members, and the capacity building committee which we are proposing, which we will talk about now, will take care of that. Friends, of course, there is no topic assigned to me, and I don't want to bore you for more than 10 minutes for the last session because the whole day you've been listening. As you know, I represent the Finance Industry Development Council and the founder president of that. Been in existence since 20 years, and there's association by a different name called Association of Leasing and Financial Services Companies. I had a 16 years history, so I'm head of this association in 36 years. May not be the age of many of the people sitting here, okay? I have my own NBFC and into consultancy as well as funding business. But most important thing is what is happening in the sector today. More than anything technical, I will not talk because you heard more than enough during the day. First of all, RBI has been, overzealous and over-enthusiastic in putting all the notifications, macro, on the macro issues also, not only macro and micro issues, both they have been putting circulars every day, so much so that every day we have to be going, before going to bed, Mr. G or Narendra sir will agree, we have to see, aaj kuch naya hai kya RBI ki taraf, then it's happening. RBI has been active earlier only in regulatory framework, and now they are very active on the supervision framework also, because they put in the new people, young people like you and me, not me, sorry, you, and they work in day in and out from home. 500 such people are there. There are MBAs, chartered accountants, cost accountants, and company secretaries. And they find out the mistakes once your inspection report is uploaded, inspection or supervision report, they'll find out the mistakes, and because of the various technologies which you people only must be supplying, it's very easy, and they will find out the faults, and if it's of a general nature, they will come out with the circulars. That's why it's a supervisory concerns. It can be IIFL or Kotak Mahindra Bank, or you talk of JM Financial. I'm not going into details why it happened, what happened, but my concern is each one of you will have to be very careful, and the trainings and seminars like this, plus there is no shortcut, as I will end with, to compliance, governance, and regulations. We need to be in touch with each other, exchange information, and be part of the association, be it FinTech Association or this Banking Frontier or FIDC, of course, taking care of the lending and PFCs. What all we have in plan in future, of course, I'll talk about it rather than going into details. As soon as these issues came about the two big NBFCs, earlier we had ILFS and other things. None of these NBFCs which we're talking about has a typical NBFC business. We all lend to the MSMEs, auto sectors, transport sectors, personal loans, etc., including microfinance institutions. We do not deal with any of such problems which are there. Either it can be infrastructure finance big or housing finance companies. But NBFC being general word, the media, the public, and the regulators perhaps at Delhi feel we need to be controlling NBFC in a bigger way, and we get a bad name. So immediately once this we came out with the circulars and mentioned why this happened, how this can be tackled, and what are the rules and regulations. We came out with the 2 documents, vision document and code of conduct, with details, of course, is there with Manoj Agarwal, he can share with you, and that was received very well by the regulators and all that. Again, I'll not go into details, because you will have to understand why this is all necessary, because unless we self-regulate ourselves, I'll come to the SRO, because many of the people in the room next to when I was interacting, we asked about what is the status. Of course, I'll talk about it at the end, but not in detail again, because we are filing the application very soon, okay? We had this code of conduct. We prescribe the rules and regulations for corporate governance, risk management, audit requirements, grievance redressal mechanism, delinquency management, education, outsourcing arrangements with the recovery management, and engagement of these people. There are detailed guidelines which most of the people have agreed to follow, and they follow it up again. After that, we issued another advisory on 11th March, where we talked about adherence to all applicable laws and the regulations, observations, and concerns. What happens is people take this, junior people who come to your office very lightly, RBI, no. Every observation, query, suggestion, from RBI has to be taken very seriously and to be replied immediately. If we delay in that, there is a suspicion created and we are into trouble. I've advised all the companies where I'm the advisor also, take RBI's observations very seriously and act very fast on that. The fair practice code of RBI has to be followed. A board-level governance committees how to be formulated. They're all suggestions. And if any company finds it difficult, there are big companies, which give the guideline. And FIDC itself has come out with the standard documentation, which can be prescribed, and you can follow the lines. It's very easy to earn the money in a legal way, simple way, and decent way, rather than going around that. It will not be a long term, okay? And we all are long-term players. Let's follow that. It's never difficult. You may find some regulation tough to follow in the beginning, from 1 month, 2 months. But over times, there is a reason why it's been done. And if it's tough, RBI has reversed some of the decisions also with the help. We have been proactive talking, and whenever necessary, we talk with IBA, Sadhan, MFIN, etc., and we jointly represent on the issues. I'm not going into technological advancements because RBI has asked us to give the note. We have given the note on digital onboarding, KYC, data analytics, credit scoring, but everything, we are working jointly with RBI on some of the things which should be in there, plus maybe for fintech as well as NBFCs, but some of the players like fintech, account aggregators, or the P2P people must be finding it difficult to comply with, because RBI itself is not sure of what type of regulation can come, because their operation systems, the models, everything is new to everybody. So maybe in the beginning, you will have the tough regulations. What we had, one NBFC failed in 97. We had all the restrictions. For 2-3 years, no NBFC could function. It happens when there is a changeover like this, okay? And of course, on the consumer lending, your GST analysis, compliance, and regulatory reporting, there are systems and operational efficiencies which have been worked out with RBI, and we are put in place on our website also. Apart from that, what all we do at FIDC, of course, a very efficient board of directors. All the NBFCs, lending NBFCs are members here. There is no exception. And we represent, we on the pre-budget meetings, RBI and Ministry of Finance, Road Transport Ministry, MSME Ministry, and whenever required. We have, HR forum with us, representation committee, legal committee, CFO committee, housing finance companies forum, and now separate forum for factoring and IFC also we are working on it because they are also becoming members. We're very systematic data analysis and dissemination on the asset side of the balance sheet of the NBFCs. We agree that we are not as up-to-date as Sadhan maybe because, many of the people, our people don't subscribe to this data because of the heterogeneity, confidentiality, and privacy problems. But very soon that's going to end. Once we get the SRO status, which I'll talk at the end, everybody will have to fall in line, and they will have to give the data which is published. And we have a system which we are working on it. But otherwise, on asset side, we have worked out with CRIF, and its quarterly dissemination is being done. Again, you can see on the website where we give asset data on the category-wise, state-wise, size-wise, everything. It's quite in detail. I mean, again, benefits of membership I am not going, but the most important point which Manoj ji also asked, what's the status of an SRO? Yes, in lending NBFC, RBI has proposed that there'll be a SRO for NBFCs and FinTech. FinTech, there are 3 associations. I'm not into that, but for lending NBFC, we are the only association. And all our directors, including, we had more than 5 meetings so far, and one, the last meeting, which is happening day after tomorrow. After that, we are going to apply, and the application is 90% ready. Definitely before Ganesh Chaturthi, Gigi sir, I have a plan to file the SRO application. Gigi sir is also our advisor and mentor here. And we have worked out the entire structure which RBI prescribed in the omnibus guideline which they have given about the governance structure. You know, 1/3 of our board of directors, one of the difficult position was the membership and the directors. 1/3 has to be independent. Today, out of 19 directors, only 1 independent director, Mahesh Thakkar. All are otherwise NBFC players. So we have to change the structure of the board of directors, which we are doing it. Okay, we have the governance structure, then operational plan, membership, of each category, upper layer, base layer, middle layer, and we have to see that each category sector-wise and layer-wise are properly and adequately represented in the SRO governance structure. We have a grievance redressal mechanism. These are all the documents, each document is more than 20 pages. In getting drafted and getting ready, we have a legal team and all working on it, and I said more than 80% work is already complete. We will have a board level committee, because we are reducing the size of boards. We will have a board level committee, which will be SRO committee, a representation and capacity building committee, auto finance, MSME committee, gold loan, housing finance, and specific committee for base layer, because upper layer can take care of itself. Base layer requires this education training, kicking, funding, etc. How to do that? We'll have a separate committee for that. And data format and management, we're working, Gigi sir, based on the suggestions which you have given already. And when we see quarterly data or monthly data coming from Sadhan, we take a note of that and try to work out that standard data format, quarterly submission, and automatic uploading, by encrypting the data, and so that the confidentiality is maintained. And we give them the consolidated data. Definitely our technology team will get in touch with you and see how we can work on together. And of course, the financial viability which RBI has asked us. We have given a roadmap, and whatever net on funds they have prescribed, we are already fulfilling that. And in coming next 2 years, we'll have a big size. And we are taking Indian Bank Association as our model and working on that. Having said that, what's the concluding things? What is the road ahead for the NBFC sector? As I said, governance, systems, and compliance, there is no shortcut to that. Financial prudence has to be maintained. Any problem, anytime, you can get in touch with, even if this field is small and the people are competitors, there's a huge thing. Indian economy is growing. How is the market? If some people ask me, I said, market is good, economy is good, we have to do good. Because in that, we'll get the fund, we will get the customers, we will get a good recovery also. What else you want? As long as the market is good, everything is going to be good for us if we are doing it in a systematic manner. And the coordination between lenders and other stakeholders is there. We have a regular dialogue with all the regulators, which need to be continued. Awareness campaign of these types of seminars, etc., to be organized more often. And we have to help ourselves. I told RBI, always I've been telling, since more than 5 years now, RBI should enable, enrich, and empower us. And we know our business very well, how to reach the financial inclusion target which the Prime Minister or the Government of India or the RBI has got. And we will help us. We were just 5 to 6% of the gross domestic capital formation 5-6 years back. Today we are around 20%. Entire finance NBFC sector, including MFI and HFCs. It's a huge size. It can't be ignored. And that's why you find the regulations in tandem with the banks. So let's carry our business in a good way. Whatever guidance you require through Manoj Agarwal, you can approach us. And if you are an NBFC or FinTech, of course, there are different balls. But there are people within us who can help those companies. And let's grow together. Nothing is going to stop us. And as long as the country is moving in the right direction, we are always there for you. Thank you very much. And of course, all the best to the awardees as well as I've seen the applications myself because I'm the part of jury members. So if somebody has not got it, blame it on me. Thank you, friends. Thank you.